Hey, what's up my people, this is Option Science channel. Welcome back once again to one trade analysis video. So today is 13th of October, Thursday. Thursdays happen to be the weekly expiry. So it was a profitable day for us indeed, and we have booked around 23,000 profit, which is more than 1% for the capital. So today trade, I wouldn't say it was really tough, and neither was it really easy also. So let's get into the charts and understand how the day's trade went. So those who have been following my channel, they would know that I have a simple strategy of straddles mixed with the price action techniques. So I started off with straddles at 39,000 here. When the market opened at this candle, I started off with 39,000 calls and puts. So I had drawn this two lines, black lines, you can see. I had drawn this prior to the opening of the market. These are nothing but one was the day's high yesterday, and one was an important level which I was watching. So if you see this particular line, the price has taken rejection from this particular line yesterday for more than 5 or 6 times. So 1, 2, 3, 4, 5, 6 times it has taken rejection, and when finally it broke out of this line, it has given a nice rally upward movement. So this level, 38,900 level, was an important level to watch on for today's trade. So I had marked this level in my charts prior to the opening of market, and as soon as the market opened, it took support at the exact same level. So if you see in this green candle, it has taken support at the exact same level. Market tried moving up, but then eventually market started coming down, and in this red candle it broke the previous day's level, important level which we had marked in our charts. It broke the previous day level, so it was a clear indication of bearish trend. So around at this point, I cut down my 39,000 PE leg and 39,000 CE leg. I rode towards the bottom of the market. So I'll show you my positions. If you see, my major gain has come from 39,000 calls, which I have around 30,000 profit, and 39,000 puts I had squared off at minus 10,000 losses. So 30,000 profits from call legs and 10,000 losses from put legs. So put together I had around 20,000 profits. Rest every legs which you are seeing are nothing but the adjustments with regard to the movement of the market. So I'll explain that also briefly. So what happened was that once this red candle broke the important level which we had marked in our charts, it was a clear bearish trend, and I had kept open my 39,000 call option till somewhere around this point. So around this point, market had given a nice down move, and at this point it looked like it was consolidating a bit. So I sold one more straddle here, and I had marked this rectangle pattern within which the price was consolidating. So once again, when the price broke down of that rectangular area with this red candle, I took off my straddles. So I had booked around somewhere around 2,000 rupees profit in that straddle, and I took off that straddle. So when market started coming down, I had started taking my put positions. So initially I took around 38,300 put levels, and also I had taken some amount of 38,200 put level also. 38,200 put level also. So as the market came down, I kept adjusting between 38,300 and 38,200. So when market was at its lowest, I squared off all my 38,300 positions and I moved completely to 38,200 positions. And again, when the market started going up, I shifted back my puts from 38,200 to 38,300. So after that, it was just pure waiting. So in between, somewhere I did a blunder wherein I exited the 39,000 calls and came one level below, that is 38,900, which was a blunder. I would say I need not have adjusted that position. And in this up move, this particular big green candle which you can see here, I lost some 5 or 6 points, around 4,000 to 5,000 lows was there. But anyway, I recovered it back by adding more position on 39,000 calls and keeping my puts at 38,300. So towards the closure of the market, 38,500 has had a good put writing. So I had moved my puts from 38,300 to 38,500 for some amount of time, and comfortably by around 230 240 I exited my positions with over 1% of profits. So this is how my expiry trade had gone. And compared to last month, where market was highly volatile and it was pretty difficult to trade non-directional trades, this month seems to be okay for non-directional people, especially non-directional selling. And last month was I would say a paradise market for buyers, wherein there was huge up move and huge down move. It was pretty easy to capture those moves also. So as a buyer, last month was pretty good. And this month it seems to be like a little tough for the buyers, and market seems to be not making violent moves on either side, but more of like consolidating, and of course some movements are there, but it is easy to hold it under the grip. So non-directional selling has been a little easy this month, and I wouldn't take it for granted, because market has the notion of proving you wrong immediately. If you have any prejudiced view of looking at the market, it obviously will prove you wrong and prove you incorrect. So I'm not taking markets for granted. I would always expect the violent moves to come any day, but so far this month has been quite easy compared to last month. So that's it for the day. I hope this daily trade videos which I am updating, you guys are getting some idea how to trade on expiries, basically option selling. And there was interestingly, there was a friend who was sitting with me. He aspires to be an option buyer. So actually there was a good opportunity here for option buying as well. If you see this particular red candle, it is a sure shot downward momentum, and had you entered in PE position at this particular red candle, you could have captured the entire down move and made pretty good amount of profits as well. So there is nothing like only selling is comfortable and buying is difficult, and there is nothing like only buyers can make good money and sellers cannot make money. It goes both ways, right? Once if you are a seller, then you are able to survive only because there are buyers, and if you are a buyer, you are able to buy only because there are sellers. So both works in tandem. Sellers also make money, buyers also make money. There is no bias as such. You have to choose what is your trading style and what is fitting your psychology. For me, option selling suits my psychology, and that is why I do option selling. And that too, I do mainly non-directional trades with directional conviction, sometimes with price action techniques. So that's it for the day. Guys. I'll be back with more and more such videos, wherein I'll be educating you how my trade is going and how I adjust my positions, so that somebody, at least one person, if they are able to take out something from my videos, I would be truly grateful, guys. I'm also attaching a time-lapse video of my P&L terminal at the end of this video. So that's it for the day. I wish you all the best. Have a nice day.